guys?
Perfect. I'm at home, so I cannot guarantee that the dogs aren't going to go crazy at some point during this presentation.
Is there anything I need to know about the slideshow?
I don't think so. That's all Vicky. I think we're just basically.
Okay, so you'll just give me the next slide.
Yep.
Should we scratch our nose?
Yeah. So did your furnace get fixed?
No. Today, hopefully.
That's brutal. It's cold.
We all slept in the same bed.
That's good for a marriage. Yeah, when you were like, what did you lost internet too, Melissa?
I lost all the things, like my mind, the internet, all the things. How dare they have a snow day after a long weekend?
Oh, I know, right?
And don't get me wrong, like I ended up having a lot of fun. Like I took the kids tobogganing and we hung out and stuff. So it was nice. But at the same time, like Vicky and I were talking, like, I'm like, we're trying to run payroll as my kids are running around screaming about wanting to go skating and stuff. Like it was a gong show yesterday.
Yeah.
And then Mark, you know, Mark Roberts.
What's that?
Okay. You know Mark Roberts, he's here right now painting my house.
Okay. Just wanted to let you know we have some of our guests coming into the call now.
Perfect.
Danielle, feel free to unmute yourself and say hi while we wait for everybody to get in.
Hi, everyone.
Or not. It's okay. Hi. Yeah, we were joking. Someone asked me the other day how my Valentine's Day was. And I was like, well, the four of us had a lovely dinner at the dining room table just to mix things up. And Family Day has been every day for the past year. So. So ladies, it's 12. Let's give it a few minutes to see who enters in though, okay?
Okay.
Some people are late coming in to
finishing eating their lunch.
Yeah, you remember how it used to be you prepped so much for a Zoom call to make sure you were on time, and now everyone like skates right in.
I am cold today.
That is one thing that I don't love about having switched to a more virtual environment. Like when you meet in person, you feel like you have to be there right on time. I feel like there's definitely a greater sense of entitlement to kind of peruse in when it's online.
Yeah, it's easier, right? Mm-hmm. Hi, Anna, how are you?
Sorry, I was muted. I'm good, thanks. How are you doing?
Hi. You know what, since it's mainly ladies on the call, I'll let you know we're just putting together a fun little Women's Day event that I'll be sending out some marketing on later on today. So it won't be too onerous. It should be mostly fun. So I'll make sure, and feel free to share. It's open to everybody, not even chamber members. So it should be good. And that's not, we're going to do it March 11th. So we're not competing with all the other Women's Day events that are happening virtually. So ladies, I'm not sure how much longer you want to wait. How long is your presentation?
You have a lot more, Melanie, or is it just one or two?
Well, we had 14 registered for the call. So yeah, we'd still have, oh, here we go. So I think what's going to happen is If we want to give it a couple of minutes, we'll probably get 4 or 5 more. And then just let people come in as they go.
Sounds good.
Hi, Allison.
Hi, everybody.
Hey, Allison.
Victoria, your hair
What?
is so long.
Oh, I know.
I haven't seen you in 3 or 4 or 5 years though, so.
Feels like it, right?
Oh my goodness.
COVID.
I know.
Okay. All right. So ladies, let's go ahead and start. I just want to be respectful of everybody's time, if you're okay with that. And I'll just let people in as we go.
Ah, it sounds
You
good.
can all see the screen? Everybody can see the screen? Awesome. So I'm going to say a quick welcome to everybody. This is the second in our Lunch and Learn series for the Halton Hills Chamber of Commerce. And today we're talking about a really topical thing that we're all working on right now. No more so than the 3 ladies that are on our call today who are going to walk us through the tax implications and some tips regarding all of the different government programs and how they might impact us in a small business kind of forum. So it's a casual lunch and learn. We're here to learn from each other. So we do have a presentation which we'll be sending out to everyone afterwards. Want to remind everybody that your TV is recording this. So if you miss a part of it, you'll be able to catch it on your local Cogeco channel. The other thing to keep in mind is that if you have questions, please put them in the chat box. I'll be monitoring that, and then we'll have a good Q&A at the end of the presentation. So please put your questions in there as they come, and we'll make sure to get to them. So I am going to mute myself, and I'm going to ask everybody besides our speakers to do that as well. And I'm going to hand it over to our first presenter. We have Victoria Harrison with us today from GBA LLP. We have Melissa Therian from Therian Accounting and Laura Bedell from Laura Bedell Accounting Solutions. So we are in good hands. So ladies, take it.
All right, hello and good afternoon, everyone. So I'm going to go through the first bit that we have here up on the screen, and it's the Canadian Emergency Wage Subsidy. So the CEWS, as everyone's heard it, as the
Vicky?
acronym.
Vicky, sorry, you have the wrong one unmuted.
Oh.
You have the presentation screen unmuted, so it's echoing through because it's not going through your headphones to us.
Sorry.
There you go. Now you just gotta mute the other one. Talk.
There we go. Is that better?
So much better. Sorry about that.
Thanks, Melissa. I'm glad someone mentioned that. All right. So as I was mentioning, so I'm going to speak upon the Canadian Emergency Wage Subsidy, which is also known as CEWS, the CEWS. So this program was actually introduced in March of 2020, and it was for just an initial period of 12 weeks. But then since then, the federal government has made adjustments and they've extended it to June of 2021. The latest extension and changes to the program were also announced on October 9th of 2020, and the related legislation was introduced on November 2nd of 2020, and it passed into the law of November 19th of 2020. So all these rules and legislation changes and all that fun stuff that we love, and the regulations containing the details for the program was announced on March 13th of 2021 on December 29th. So a little background of the CEWS, the CEWS, is that it's calculated on a per employee basis, per week basis, to a weekly maximum wage of $1,000 129. So the needs or the eligibility requirements for this would that you need a payroll account, and you need to have this prior to March 15th of 2020. The types of people that can actually receive this subsidy are individuals, corporations, not-for-profits, and registered charities. They must all experience a revenue drop. So there's an actual calculation on how to determine this. So you can either compare it from the previous year of 2019 to the current year of 2020. So you'd be comparing, say, for instance, June 2020 to June 2019. You can also compare it on an average of your January to February 2020 revenue. So if you experience a decline, you'll be considered eligible for this. So there is actually two methods of revenue that you can do it based on. So you can do it on the accrual method or the cash basis method. So this spreadsheet here is just showing you the various claim periods and the various declines in revenue that you need to have in order to receive the subsidy. So as you can see, because of the changes being made during the year, if you experienced a decline in revenue from periods 1, 3, and 4 of 30%, you would qualify for the subsidy. So they had actually changed it for periods 5, where you would receive the subsidy on any decline in revenue. And this would be based on a sliding scale or a formula to determine how much subsidy you would receive. So the maximum subsidy, as you can see, has changed from 75% to 85%, back down to 75% because they like to keep us on our toes. And also back down to 65 to 75. So again, the government likes to put all these different rules and implications just to make sure that we're doing our job and changing our methods and things like that. So some fun facts. So as I mentioned, starting in period 5, any revenue decrease, you would receive the subsidy. The CEWS cannot be taken actually on employees taking the CERB or the CRB, which Melissa will touch base on. There is the temporary wage subsidy that was back in March of 2020. And this actually must be deducted from your periods that you've claimed the CEWS. And it's a separate government filing form that needs to be done before you file your T4s this year. Your CEWS is received, which is recorded in income, but it's not included in actually the calculation when you determine whether or not you had a revenue decrease to get the CEWS. Any shareholders, so with the non-arm's length employees are definitely eligible for the CEWS, but only if they received wages prior to March 15th of 2020. And there is a maximum amount. And then generally the employers will receive the funds anywhere between 7 to 10 business days. But I've always mentioned to clients that they should register for my business account in order to receive these subsidies or any subsidies that the government is giving out, and set up an electronic fund like direct deposit. So I just mentioned some CEWS statistics, which is definitely eye-opening. So total to date approved applications is 2.5 million. Total subsidies approved is $64 billion, which is crazy amounts. It's just amazing that the government is giving away these subsidies to help people keeping their employees in a job, which is just, I find just amazing. As you can see also too, these have been broken down by periods. And like period 1 was the first period, which was 3.6 million. And then you can see the various other periods. So if you're definitely eligible and fall into those eligibilities, it was definitely something that you need to have a look at. So I believe our next that we're going to talk about is the CERS, and I'll let Melissa take it away.
Thanks so much, Vicki. Yeah, in Vicki's presentation, she mentioned that I might be talking about CERB. So that's the employer, or sorry, that's for individuals. So it's not within this presentation, but it does relate to what Vicki was just talking about. The CEWS is kind of like your employer focused EI. It just means that employers can keep staff on rather than having to worry about laying staff off and then having the government pay them EI or them going on the CERB. So it's a really great incentive to employers to try to retain staff and keep their workforce going rather than, you know, sit there and try to decide who they have to lay off or if they have to shut down because of the additional expense. So it's a really great program, and it's wonderful that our small businesses especially have access to it. And that have access to the ability to apply for it online too, which is great. They rolled that out really fast. So, so thanks, Vicki. So I'm Melissa Tarian. I'm going to talk to you about the Canadian Emergency Rent Subsidy. It's called CERS. There's acronyms for everything, and I feel like we're trying to speak Star Wars languages half the time. So yeah, if you would pop over to the next one, Melanie, thank you. Okay, so this relates to, well, it speaks specifically to rent, but it does relate to owner-occupied buildings as well. So for eligibility requirements, the company must have had a CRA business number on or before September 27th of 2020. The qualifying business must have a decline in revenue due to COVID-19 pandemic. The corporation, sole proprietor, registered charities, and not-for-profit organizations are all eligible to receive this benefit, which is great. Not all of the programs are open to not-for-profit organizations or charities. So this is really, really helpful for everybody to maintain their business location. You must have eligible expenses on a qualifying property. So that's where it kind of opens things up to owners as well as tenants. Well, owner-occupied buildings. So the lockdown support is businesses eligible for the base subsidy. They may also be eligible for lockdown support. If your business activities were significantly affected by public health order for a week or more, meaning completely shut down or cease some or all activities that are affected by at least 25% of your revenues, you'd be eligible for the lockdown support. The new lockdown support would be available retroactively to September 27th, 2020, and it's in place until June of 2021. So this is really great for when we just came out of the gray zone. So many businesses couldn't open their doors at all. They're not considered an essential service, which means all of our restaurants that were scrambling to try to do takeout, all of those things, their revenues kind of went from, you know, somewhat sustaining to trying to completely pivot, which I'm sick of hearing that word with COVID, but completely pivot just to try to stay alive and keep cash flow coming through. So that's really what this legislation is for. It's to try to help people who have literally no other choice. Their business responsibility is to follow the health recommendations of the government, and the government saying, you know, because you're doing that, we're willing to try to help you out more. So that's the additional lockdown support that they've put in place. Melanie, if we could get the next one. Okay, so this is a lot to take in. If anybody wants screenshots of these later, I'm more than happy to send them to you. Essentially, the qualifying properties, so the properties that do qualify include real or immovable property or land in Canada that your business or organization owns or rents, which is wonderful, and uses in the course of your ordinary activity. Properties that do not qualify is your home, your cottage, your residence used by you, your family members, or any other non-arm's length persons. Any properties that you own that are primarily used to earn rental income from arm's length properties, or any properties that are primarily used to earn rental income directly or indirectly from a non-arm's length party that are primarily used by that party to earn rental income. So basically it's just saying it has to be a business. You can't claim the house that your cousin lives in. You can't claim the place that your, nephew property manages for you and then rents out. It has to be someplace that you either own or that you are renting and that is actively being used for business purposes, that is not producing more rent. Eligible expenses that they'll take into account to determine your eligibility for the program. So it did say that you have to have actual expenses related to the property. So for each claim period, you can claim eligible expenses up to a maximum of $75,000 per business location for both the base and the top up, and $300,000 in total for all locations, including any amounts claimed by affiliated entities. I mean, that doesn't really apply to most of us small business people in Halton Hills. But what it does mean is that if you happen to say, I have a client who owns a franchise, he has multiple locations that he's paying rent at, the $75,000 per business location is huge. Like rent can be insane depending on where you are in Halton. And the $300,000 might apply in that scenario depending on how many locations that one person has. So if you're looking at a franchise owner of McDonald's, if they have 7 or 8 locations and they're at, top spot corners, the rent there can be significant. But I really think that this has made it very accessible for the smaller business owners that we might have locally, where you're not paying, $40,000 a month in rent and you only have your one location. The eligibility criteria for expenses that you would need to meet is that only amounts paid or payable to an arm's length party can be calculated or can be included, which means you can't, include anything that you're paying to your parents. The expense must be in respect to the claim period. So that makes sense. You can only claim things that are in the period that you're applying for. And the expense must be paid or payable under a written agreement in place before October 9th of 2020. Or that it's a renewal or substantially similar term of assignment and agreement. So if your rent, say, your lease was up for renewal in April, they're not going to tell you that you can't do it anymore as long as that lease isn't exorbitantly different than the one that you were already in. So if you just wanted to extend, you'd be fine. Yeah, thanks, Mel. Okay, so additionally, what expenses are eligible? This is pretty straightforward. So the rent, based on your rent that you have a contract for and that you have proof of that was in place before October. Amounts required to be paid or payable by you under a net lease, which would be base rent and then regular payments for customary operating expenses like your property insurance, your utilities, your common area maintenance, property or similar taxes, including school and municipal taxes, and regular payments to the lessor for customary ancillary services. So if you regularly pay part of, say, snow plowing, because we just got 1 million meters of snow, if you would regularly pay a percentage of that, you'd still be able to claim it in here as long as it was within your contract, which is great. Eligible expenses if you own a qualifying property. And I think this is one that a lot of people miss out on, is that you can claim things if you own the property as well. So property and similar taxes, so there's school taxes, municipal, your property insurance, and interest on commercial mortgages for the purpose of purchasing real property. So basically your mortgage for the building you can claim, which is wonderful. Okay. The base rate subsidy for organizations impacted by the crisis, it's really just a bunch of information, to be honest. If you experienced 0 reduction in your income, you're going to get 0 money back from the subsidy. It just makes sense, right? It's just your ongoing operation. So it is a sliding scale based on the amount of money that you might have missed out on over the course of COVID. So just keep that in mind. I'm not going to go through the calculations in depth because it's arduous. Anyways, next slide, please, Mel. Arduous. Okay, so some quick facts. Payments are made directly to the qualifying renters and property owners without requiring the participation of landlords. So that's a change from when the program was originally rolled out back in the spring. That program ran from March until September. And it definitely was complicated for a lot of people who were trying to apply because they were relying heavily on their landlord's participation. And some landlords just didn't want to take the time or energy to do it. I think the CRA recognized that it was definitely a problem, and that's why they changed it. If the business collects CEWS, they must use the same revenue decline method, which also just makes sense. You can't be leveraging one version for one program and then a different version for the other program. You have to basically just lay it all out there and say, this is where we're at, and take what you can get from it. And that's not to say that you can't use the one that most benefits you. You just have to run those calculations first. And then it runs as the same periods as the CEWS program, which again is why I want you using all the same information. Let's go next one, Mel. Thank you. So quick statistics, 347,000 people have applied for CERS, and it's paid out $1.29 billion. So not quite as much as Vicki's presentation did, but still that's a lot of money. Like that's a ton of businesses who've been helped to maintain their operations, to maintain their location, and be able to continue on through all of this, which is great. All right, I'm done. I think it's over to Laura Bedell.
Thank you, Melissa. So, hi everyone, I'm Laura Bedell, and I'm going to talk to you about the CEBA loans. So, if we walk away from my piece of the presentation, we're going to get two kind of messages you're going to keep hearing me saying. If we were in a big auditorium, I'd have you chant it back to me. There's no such thing as free money, and you need a plan. Is basically what I'm going to say is my big takeaway from the CEBA loan. So the CEBA loan was the Canada Emergency Business Account. It's an interest-free loan. The first part came out and you were able to apply for $40,000. And if you could pay that back by the end of 2022, then 10,000 was forgiven. So you borrow 40, you pay back 30. No interest during that period of time. And sounds good. They then extended it and said, well, we'll offer up another 20,000. And with that additional 20,000, you borrow 20, 10 gets forgiven. So half. All in all, eligible is $60,000, of which 20,000 you don't have to pay back. If you pay back the 40 by December 2022, no interest. Sounds like a good deal. So let's go to the next slide, Mel. So they made this fairly widely available in some ways. So the small businesses are eligible, not-for-profits are eligible, not registered charities though. They were not included in this group. Sole proprietors, so the really, really small businesses. Businesses who relied heavily on contractors, and family-owned companies that pay their employees through dividends instead of payroll, okay? So if your family's all working together and you're getting dividends, you could still qualify for the CEBA loan. Go ahead. So to qualify, you had to have an active CRA business number in effect by March 1st, 2020. That was criteria 1. So if you were thinking about starting a business and you didn't get your stuff together until April, you don't qualify, okay? You've got to be active as of March 1st, 2020. You had to have an active business account with the lender that you were going to partner with at the time of applying for CEBA. They did have a qualification on there that said, look, if you didn't have an active business account, go to the bank you normally deal with, open up an account, and then go ahead and apply for CEBA. But they were careful to say, make sure it's a bank that you already have a relationship with. And that was because they were trying to avoid people from going bank to bank to bank to bank to bank to try to get multiple loans, okay? You had to say and be intending to continue to operate your business, okay? So if your business plan always was, you know, business wasn't going great in 2019, you were going to give it until 2020 and then wind up, and then the pandemic hit, the loan might be a good source of money, but you weren't planning on continuing your business. So that's not really consistent with what you were trying to do. The goal of the loan was to help businesses not have to close their doors. So if you were already had some sort of plan to change your business and close out, then you don't qualify for CEBA. And as I alluded to earlier, you can't have a CEBA loan with a different bank, one loan per company, okay? So this is maybe a little tiny to read, but basically there were two options. You could take the payroll stream option. And what that meant was that you look at 2019, and if you paid out a payroll somewhere between $20,000 and $1.5 million on the year, that's a stream that made you eligible for CEBA, right? That was your way of saying to the lenders, hey, I've got this big payroll that I have to keep up with, or I'm going to end up laying people off. The other option they called the non-deferrable expense stream, which is one that I think a lot of people jumped on. But you had to, again, show that you had 20,000 less your employment income, because you're not going to double count it, in non-deferrable expenses, sorry, 40 to 1.5 million. So basically what that means is I have a loan and I've got loan payments I have to make. I have rent and I've got rent payments I have to make. My property taxes. Doesn't matter that I'm not bringing in any revenue. It doesn't matter that the government shut my doors. I have to keep making these payments. And if you have those payments that you have to keep making, irrespective of the fact that you're not bringing in revenue, that's a non-deferrable expense and you could apply under that stream. Okay. They wanted you to show that you had filed your 2019 taxes, so your previous tax return. There was a little caveat that said, if you're in the process of filing, we will look at the previous year, but they were really pushing, get your taxes up to date. So you had to be a current taxpayer and you had to have these expenses that you just couldn't get out of. Okay. So some facts, and this is where the chance, right? The forgivable portion has to be reported as income at the time that the CEBA was received. So what does that mean? Last year, your business applied for $60,000. You're expecting $20,000 to be forgiven. That's income this year. Okay, so it's going to be recorded as income. In principle, you're going to pay tax on that. We'll talk about how you need to have a plan. You need to talk to your tax preparer because there's ways to reduce that with expenses, but understand that that is income this year. And it doesn't matter that you have not yet proven that you're going to repay the loan. The assumption is you will. There are things you can do, but that's the assumption. So that is income this year. The balance of the loan, the part that's not going to be forgivable, has to be repaid on or before December 31st, 2022. Unpaid loans, if you don't pay it off, they're going to convert it into a 3-year loan with an interest rate of 5%. So this is where I said you need a plan. It is now February 17th of 2021. You've got over a year, close to 2, not quite. But to pay back $40,000 is a lot that you're going to have to start to think about. Am I going to have that money available? Because I said when I applied, I have expenses that I need cash for. So that cash is gone. It got used. Now you've got to regenerate that cash and still maintain your ability to pay those non-deferrable expenses. You're going to have to start to think about, how am I going to do that? Am I going to be able to do that? And how will I carry? And that's a good conversation for you, your tax preparer and your day-to-day bookkeeper, right? To talk about what kinds of things you have going on. The funds were meant to pay for your non-deferrable expenses. They didn't want you to lay people off if you could help it. They didn't want you to default on your mortgage or to not pay your property tax and whatever else, insurance and all those things that you couldn't get out of. So you had to pay that. You couldn't take the money and say, well, now that I'm working from home, my decor is making me crazy, I'm going to redecorate. Right? You couldn't do that. You couldn't say, I've always really wanted you know, a better car. Now's my opportunity. Not the way. So you're going to want to have conversations with your day-to-day bookkeeping group to say, okay, if we were asked, could we show that we actually used the money for what it was intended for? I know I've seen clients where they banked it. They put it, you know, off to the side and they're, you know, still, you know, and I'm saying you got to use the money. Like, did you have non-deferrable expenses? It's great that your cash flow is maybe a little bit better than you thought. And that's a conversation we can have, but, you know, putting it away, like maybe you need to repay it if you don't need it, right? So these are all conversations that you need to have. But the important thing is you got to talk to your tax preparer. You've got income. that you got to think about reporting. There are ways to defer reporting that income, but that means also not taking expenses against your tax return. And you should get your tax preparer to do some calculations to figure out what's best for you and your business. You need to have the conversation am I actually going to qualify for forgiveness, or am I going to end up paying this back with a 3-year term, 5%? And what does those payments look like? You know, and how do I get my tax back if I have to report it as income this year and I don't think I'm going to qualify, right? So those are all good conversations that you should be having, and having them soon, because we still have almost 2 years, not quite 2 years, to have those conversations and make those plans. So next slide. And here are my statistics. So there have been 828,000 approved CEBA loans, with an additional 439,000 expansions. So the expansions, my understanding is that's only people who applied for the original went back for the 20. If you didn't apply for the original, you get lumped into that first number. And in total, there is $42 billion of CEBA loans outstanding as of today. So my message again, you need a plan. You got to understand there are tax implications to this. It's a good time to talk to your tax preparer, whoever she may be, and get that, you know, straightened out. Understand what your cash is going to look like. If you have made use of the money, document it, be ready. I expect that at some point there may be some sort of follow-up check-ins to see if you truly did qualify. You made statements on the application saying that you had these non-deferrable expenses. I would expect that there's going to be a check-in to say, okay, and how did that go? And did you pay? You know, if all of a sudden you're foreclosing on a loan that you said you were going to use this money to repay, that could be a problem. And that is my piece. So I think we are now ready to take questions.
That was so good. Thanks, ladies. We do, I have 1,000 questions for all three of you, because all three of you help the chamber in some way or another form, whether it be with our books, our taxes, or with governance advice. So you'll be hearing from me after, that's for sure. So we do have a question in the chat. I don't know if this person wants to remain anonymous. Anna, did you want to ask your question?
Sure, yeah. So for a seasonal business, they're closed from January until May, but they have employees working right now. Can they, and year over year, their revenues, January last year, January this year, are zero. Can they claim the wage subsidy?
So for seasonal workers, they have the option to claim the CEWS with seasonal workers. There's two ways of doing it when calculating the baseline. So you can either take it from their remuneration paid to the employee from January to March 15th, 2020, or an average weekly remuneration paid to the employee from March 1st to May 31st, 2019. So in both cases, though, you would take out any period of 7 or more consecutive days without pay to get that average.
Okay, so we're looking at wages, not revenues.
Right.
Okay, thanks.
So that's for the CEWS, but you would need to have a decline in revenue in order to claim the CEWS.
But if you're at 0 and 0, you don't have a decline in revenue.
You would do it based on the prior year. So you would compare July to July 2019.
But I'm trying to claim January. And
Do you have
January
revenue
this year.
January?
No, there's never revenues because they're closed. It's a greenhouse. So right now they're planting and everything. So they have no revenues, but they have people working.
Employees.
Yeah. So
You should still be able to. So anything from when you're comparing. So if it's 0 to 0, you should be able to still claim that. Okay. Thanks.
I have a question on behalf of one of our members that sent this ahead of time. So they're a relatively brand new business. So they were operational when the pandemic hit, but were really brand new. They were within their first 6 months of the startup. So any revenue comparison, unfortunately for them, actually shows that they're probably doing better, you know, because the first few months of business, it's mostly expenses, it's no revenue. So what they're finding is that they're not qualifying for anything. Is it because they're just not comparing the right framework, and should I send them to a professional? Because I don't feel like I have the appropriate amount of knowledge to be able to guide them through it. Primarily for rent and for CEBA, they don't have staff.
So the rental one's really hard for new businesses because you do have to prove revenue decline mostly. And I'm in that situation myself with one of our buildings. So proving the revenue decline is an integral part of that. And honestly, I think that the CEBA would be the best way to leverage the programs. It's specifically designed to try to help mitigate the non-deferrable stuff. So if it's the rent that they're looking for, then it kind of is what it is. Unfortunately, there's a timing issue, and there is definitely a gap for new businesses that had just opened up that they're sort of falling through the cracks of support. But at the same time, no other new business would get government support either, right? So I can see where from the government side, it's really hard to say we're going to give you guys money when other people who were struggling in the beginning never got that either, because they can't really tell without that revenue recognition how much of the struggle is COVID related and how much of that struggle is new business related. So, I mean, Laura, you might have a little bit on the CEBA to see if you feel like they would actually qualify, but I know from the rent side, I really don't see it happening.
Yeah, thanks.
Melissa.
Yeah, thanks. So yeah, I think the couple of new businesses where I had been providing guidance where they struggled again was that minimum threshold for the non-deferrable expenses because they were new. The particular ones I was looking at were fundamentally not out and renting bricks and mortar yet. So certainly, if it was a brand new, say, restaurant and you had the bricks and mortar and had the rent, then I think there's definitely possibilities for CEBA there. We'd have to, examine their situation, but yeah, it is tough because to Melissa's point, without that history, we can't tell if it's the pandemic or, just bad luck of a new business. But yeah, I think CEBA may be something that they'd want to consider, at least examining.
I think maybe Melanie froze. There we go. Or I froze.
Oh, I froze. Yep, it was me. God, I hope I looked okay.
It was quite the face. That's how I knew it was frozen.
So they need $40,000 in non-deferrable expenses in order to qualify. And yeah, Laura, to your point, that might be hard for a new business to show if rent is their primary expense, if they haven't had to get a ton of equipment, etc. So, okay, I will talk to her. I just wanted to make sure we were exploring all possible avenues for them.
Melanie,
so I have some questions.
Sorry, just one other suggestion. BDC, like the Business Development Bank of Canada, offers a lot of loan programs for small and new businesses as well. And I have a colleague that I work with often with some of my clients who's wonderful, and they are more than happy to have conversations with new business owners where they might have a little bit more wiggle room around what is COVID and what is new business pain. So it wouldn't be like a government program where, there's no interest or anything like that. But BDC does often offer decent loan rates. And if they think that might be an option, that might be a good alternative to the things that we're talking about today.
That's a great tip. I'll connect her. So with the temporary wage subsidy, do businesses need to also claim that as income?
So for the temporary wage subsidy, it's a reduction of their source deduction. So it's a separate program.
Okay, and so can businesses that are using that expect to get documentation from the government to include when they file their taxes?
No,
no? I just want to make sure
they're required to fill out a it's called the PD20 or PD7, sorry. And they have to fill it out. What they do, it's basically you have to do it separated by the periods during the time when the temporary wage subsidy was available. And they just have to basically spell it all out to the government before they're doing or filing their T4s.
Gotcha. Okay. And then other questions that we've had. Subsidy, for example, could you retroactively go back at this point and claim for those periods?
Sorry, Mel, I don't know if I froze or you froze, but I missed the first part of that question.
Oh, could you retroactively go back and apply for the wage subsidy? So let's say you didn't apply for it last fiscal. Could you do it retroactively, or is it to current only?
So no, you can go back and do your retro payments. So it's not like, I know with the rent, there was a hard cutoff for the first rent, but with the wage subsidy, that you can go back and retro do them. I believe it's up to, I think it was 6 months. So basically the first 5 periods are closed now.
Right. Okay. And what about the CEBA? If you didn't go the first round, could you do it again?
Yeah, so until March 31st. March 31st is the cutoff for applications at this point, but you can go in and apply for the full 60,000 up until then.
Okay. So Laura, that was new information, I think, for a lot of members, that $20,000 needs to be shown as income for this fiscal. So that, I'm really glad that you brought that up, because what I'm curious about is, I know last year must have been a bit messy at tax time because it was right when the pandemic was hitting. But what do we think this year is going to look like by way of audits? Do we feel like the government's going to be spending some extra time auditing small businesses that have tapped into these government programs?
So my gut feel, yeah, I think there's going to be more checking in. You know, we already saw with CERS payments where, you know, letters came out right before Christmas to say, by the way, turns out you didn't qualify, repay, repay, repay. So I think, you know, we're going to find a lot, both in the personals area and in the small business area, where there's going to be letters from the CRA saying, so you said this is what you were doing, show me this is what you did. And whether it's, you know, in the form of what I call a desktop audit, where you get a letter and you send a letter back and hopefully nobody actually shows up at your door. Yeah, I absolutely think there's going to be a lot more checking and, you know, requests for repayments in some cases.
And do you think there's any potential for the tax deadline to be deferred this year, or should business owners be sharpening their pencils and getting their little receipts in order for you guys?
So I let the others speak too. So because this is my first year in business, I'm hoping for an extension of the tax deadline because, but that's my personal desire. Nothing's been announced that I've heard so far, but maybe Melissa and Victoria have a different perspective.
Vicky, you go first.
Well, I don't believe they will be extending any deadlines. I think because last year, because they extended it, I'm hoping people that aren't expecting that it's going to be extended again this year. So I know with last year, there was a lot of hecticness around all the deadlines as well, even though when they're extended it. So I believe this year, I don't think they'll be extending it.
Okay.
So,
same.
So I think, I mean, I don't really see that they actually terminated 2019's tax season at this point, to be honest. So I think that from the audit perspective, I think there's definitely going to be more review. I think that like anybody with any sense saw all those billions of dollars that went out, and they're going to want to make sure that they know where it's going to. The thing with the CRA is that 90% of their stuff runs off of algorithms. So once people start submitting their tax returns, they're going to see how people actually did this year. And if it turns out somebody made, record profits, but they got the CEBA and CEWS and CERS and they did all the things, then I think that those are the people who are really going to have to worry. Not so much your day-to-day small businesses who are genuinely using the programs for what they're intended. Even with the CERB, like Laura was saying, they sent out letters saying you have to pay this back, and they're already starting to backpedal a little bit on that because the documentation at the beginning wasn't clear. So like for my clients, anytime that they were applying for things, I told them to actually screenshot like the eligibility requirements on the day that they applied, because they kept changing the rules throughout. And those little nuances, they can make a huge difference. It's the difference between somebody claiming the CERB on net versus gross self-employment income. So I think there is going to be a lot of audit, but I think there is also going to have to be a lot of room for discussion. As far as extending the tax deadlines, I think that they probably will. Maybe not the self-employed, June 15th version, but even the T4 reporting. Like I know Vicky and I were talking about payroll the other day. In QuickBooks, like QuickBooks Online doesn't even have their T4 module working properly yet to properly report the new boxes. So I don't know how they can expect businesses to meet the end of February deadline for income slip reporting if the primary services that do the reporting aren't going to be working properly. So yeah, I think that there's going to be some flexibility, or maybe they'll just waive some penalties and not necessarily actually extend the deadline. But yeah, I think this year is also going to be a bit of a gong show.
Back to audits, that I know that there's actually CRA has started doing like audits on the CEWS, and it's about a 15-item request. So anything from a trial balance for each month to sales transactions for each month, reconciliations, payroll reports. It's crazy.
I've seen the CERS one already go through review as well. And again, it was for clients that had multiple locations. But they did the same thing. They asked for like a month-to-month like P&L and balance sheet. And it was quick and it was easy. Here's our lease agreements. Here's the P&L. Here's a balance sheet. Here's all the information that you're asking for. And it was automatically reported because it was all in proper bookkeeping format. But yeah, they've already started being more hesitant, I think, in approving things.
Yeah, so just make sure you keep all your records and documents and have them just handy. If you're calculating your CEWS, where are you getting your calculations from? As long as you have everything separated out and documented, it should be pretty easy, the audits.
So it sounds to me like the message is to be organized, so that you can take advantage of government programs, but to also be able to defend what you've asked for and what you're claiming. And I think that's maybe why the companies that use services like yours are probably feeling a little more comfortable, rather than, if they've done these calculations on their own and, fingers crossed that they've done them the best way they can. So what about solopreneurs or single entity businesses that had claimed the wage, gosh, I can't remember the name of it. What was it? Instead of EI, I can't remember the name of it. It starts with a C. Yeah, the CERB. Sorry, thanks, Vicky. Yeah. So what about those that claimed the CERB because they didn't qualify for any government support at the time? And this is maybe looking back a little bit. Do they have to claim that as part of their income within their company, or is that only on the personal tax side?
So if they're self-employed, then that's all a personal tax transaction. So they'll get a T4 slip from the government saying this is how much you receive from CERB over the course of the year. And it would just be part of your standard T1 personal tax return, which is how you would claim your self-employment income anyway, just on a different, obviously it's a 2125 for your self-employment income. That said, when you submit your taxes, they might come back and do a review, which I think that's probably going to be a high review area as well, because with self-employment income, you don't have to prove on T4 like we do for all of the small businesses who are issuing T4s to their employees when that money was earned, right? So if you're self-employed, the CRA doesn't know when you earned that income from your self-employment. So I think that it is going to be pretty highly probable for self-employed people who claim CERB for part or all of the year to have to submit documentation for their invoicing that details out when invoices went out, what period it was, when they collected the money. And then the government will decide at that point if they owe it back or not.
Fair enough. Does anybody else have any questions specific to taxes or to the government programs that they would like to ask? You can just unmute yourself. We're a small group today.
I have one more question. On the rent subsidy, I thought I read that if you expanded, you could not claim any rent subsidy.
So you can't claim rent subsidy for changes in your rent. So like we were talking
Right.
about, there has to be consistency from October of 2020 to now for the new program between your previous contract and your new lease. So if you
Right.
decided within the pandemic that you were going to expand your operations, the government's not going to subsidize that for you. You're obviously doing well enough as a business, well, obviously doing well enough as a business that you felt that the opportunity to expand your operation justified the expense, and the government's not going to step in and say, okay, well, yeah, we'll help you with that. They would go back and they'd say, no, you had a lease, this was your standard lease. If you change the square footage for greater, we're not going to cover that. If you dropped your square footage, I'm sure they'd cover that because you were trying to be, you know, conscientious of this period. But yeah, the expansion, that's not something that the government will help with.
So we've actually taken over, I'm from the Sewing Cafe. So we actually took over White Rabbit Books. So we cut a hole. We have two separate leases because we've just taken over paying his.
Yep.
Do you think we can claim just on what our lease was before? We don't have a new lease. So we can claim just on our portion and not claim on the new expanded portion.
So without an engagement, none of us can give you actual detailed recommendation. But if I were theoretically talking to somebody who was taking over another location, but still had their current lease in place, I would say apply for the subsidy based off of your standard.
Yeah,
And
that's all I was going to
outside of
do.
your standard, I would let sleeping dogs lie. That's something that you chose electively to do outside of the
Right,
norm.
right. And that's what I was thinking I would do, is just claim it based on my original rent.
Right.
I'll give it a try and see what happens. So, okay, thanks.
Great question. And good advice, Melissa. I'm glad you remembered that. You know, there's always that element of, well, if I, were hired by you, I could give you advice. But so we want to be careful of that. Absolutely. So if there are no other questions, I think that I will let everybody get back to their day. Melissa, Laura, Vicki, you've been wonderful today. Thank you so much for sharing your insight and your expertise with us. This is an area I know that feels foreign to a lot of people, so we're really grateful for your brains and for your willingness to share your knowledge with us. So thank you so much. And we'll have another Lunch and Learn in April. What month are we? No, in March. We're still only in February. So thanks so much, everybody. And you have a great day. We'll see you soon.
Thanks, everyone.
Thank you.